Once again, welcome to our weekly webinar. Uh, again, I wanted to apologize in advance for any sort of a noise disruption that you may have, because as mentioned, I am at a Forex Expo in Dubai. And if you guys are around, I am here today and I'm here tomorrow as well. So do come to say hello. Otherwise, we are here to help you as always on a daily basis, and of course through our master series of these webinars on a weekly basis as well. Bit about myself: my name is Naeem Aslam. I work as a chief analyst for AvaTrade. I come with a wealth of 15 years of trading experience. During this time period, I have worked as a hedge fund trader for Bank of New York Mellon, as an equity trader with Bank of America, and currently providing services as a chief analyst to AvaTrade. So far, so good. You guys can hear me perfectly well, and you can also see my screen. If there is any issue with respect to sound, thank you, Amutha, thank you, Muhammad, thank you, Chu, Andres, and everyone else for replying. Disclosures and risk warnings, as always, going to be the first slide that we need to go through, which is right in front of you. If you have any further questions in relation to that, please feel free to contact your own customer service advisors, and then they be or account managers. They'd be more than happy to help you and advise you in relation to that. Now, bit of a housekeeping. Our Twitter handle is AvaTrade, and our handle for YouTube is also AvaTrade as well. I highly recommend you to follow us there, because we do on a daily basis a lot of content on Twitter and also on YouTube as well. Now, agenda for today, for many of you, you will already know who have attended, that we covered US non-farm payroll in quite a lot of detail. We talk about from the macro perspective and also from the technical analysis perspective as well. Today, I am going to drill a little bit more on the macro side, given the massive sell-off that we are seeing in the market. How does that sound to you guys? So we're going to cover the why market is really selling off, what is going on with the yields, what is the situation with inflation, why the Federal Reserve, where the Federal Reserve really sits. So that is all about in the macro part that I'll be covering. And then we will also discuss our usual agenda, which is the importance of US non-farm payroll, because as always, we understand that not everyone is up to speed. So we have to bring them up to speed. So that is agenda in front of you. So we'll be talking about the importance of US non-farm payroll data, what makes the US NFP reading, what instruments to trade, the current state of markets and analysis, defining levels and defining strategies. Now, the US non-farm payroll data, just right over here, is without any doubt is the most important economic reading out of all the economic numbers in the world. Why? Because it is the information about the US labor market, and of course the US is the biggest market in the world. So central banks are not only the Federal Reserve, which is, normally you will know that central bank as a the Federal Reserve as a central bank. So over in the United States, we call them the Federal Reserve. Not only the Federal Reserve looks at this data very closely, but the policies that they shape on the back of this number are very much going to be influencing the market throughout the world. And we also have some sort of evidence which indicates to us that other central banks kind of follow the strategy that the Federal Reserve uses as well. So the data which is coming out on Friday is going to be very, very important. I'll be talking a little bit more about that in a bit, but I just kind of wanted to make sure that you guys understand that the US non-farm payroll data is the most important economic piece of reading. It comes on the first Friday of every month almost, and it comes at 1:30 p.m. London time. So whatever your own time frames are, so you can adjust them accordingly. Like right now in London, it is 1 o'clock, 8 past 1 now. So we will see that reading coming in on the first Friday of the month. So we will look at that just shortly with respect to it as well. Now, what makes the US NFP reading? There are a number of other economic readings which are very much making the US NFP reading, or kind of gives us clues for the US NFP reading as well, such as the US ADP. The way ADP stands for the US private employment numbers. They come on Wednesday before the US non-farm payroll data. And today we are not going to get those numbers, because usually 95 or 99% of the time this data comes before that. But this time, the way that the US non-farm payroll data is scheduled, we won't be seeing that. But that number gives us a very, very good indication what to expect out of the US NFP. And remember, when this data comes out, we have a number of instruments which are really likely to move massively on the back of this data. So what are those instruments? What are those sectors? What are those assets? So firstly is your Forex market. Anything which trades against the dollar is going to see enormous amount of volatility at 1:30 p.m. London time on Friday. Secondly, we have gold and oil. Oil, not so much, but gold certainly is going to see pretty mammoth or big moves on the back of this particular number, which is going to be coming out again at 1:30 p.m. London time. So you will see huge volatility going into that. The third sector that you wanted to focus on the back of that, if you don't find the opportunity to trade in the first two, is of course your equity markets. And by that, I mean the S&P 500 index, which is known as the US 500, the Nasdaq, which is your US 100, and of course the Dow Jones Industrial Average, which is also known as DJ30 or US 30. So these are very, very much going to have a big influence on the back of that. And then you also have your treasury markets, but which is beyond the scope of this particular webinar. So we wouldn't really go into too much of a detail. As far as for the time being, first thing, why the US NFP data is so important. When it comes out, what are the ingredients of it, and what instruments or sectors are likely to move on the back of that. If you guys can understand this particular aspect so far, that is great. So that means that we've done with this particular section, and we are ready to move on the current state of markets and analysis. And that would mean your fundamentals and of course your technical analysis. So give us a yes or no if you need me to explain anything a bit more on that. On the first part, if you are clear about what is the US non-farm payroll data, why is it so important, and what instruments to trade. Okay. So I do get a few notes. So okay, so Sam, so let me explain that to you once again. The US non-farm payroll data. So let me now take you to the calendar to really show you that. So give me 1 second. So if I delete all the drawings, so this is your forexfactory.com. You can see it on AvaTrade or any other particular website as well. So what we will see is that this US non-farm payroll number is over here, right? Obviously it's going to be the first Friday, and it's not this one, so it's going to be, like I said, 99% it comes on that, but when it doesn't, then it's the following Friday, and that following Friday under this one comes in over here, 8th of October. This is your US non-farm payroll data. It comes at 12:30 GMT or 1:30 p.m. London time. that is the number that we are going to be focusing on. We're going to get the unemployment rate. We're going to get the non-farm employment change. Last time the data printed at 235,000, it was very, very weak number. Average hourly earnings are also going to be coming out, and at the same time we will also have the employment rate. But on Wednesday over here, like I said, the Wednesday before the US non-farm payroll data is when we get the ADP numbers, the employment numbers. They're going to be coming at 13:15 London time or 12:15 GMT, and again the the derivatives, the assets that you wanted to trade on the back of that are very much going to be, as I discussed before, your Forex market, your commodity market, your equity market, and of course you can trade your treasury yields as well, your fixed income market, but that's not what we're going to cover. Now, let's begin the conversation by looking at the market structure and then see where the market is very much trading in relation to that, and where are there any opportunities if there are any. So what we really see is this is the S&P 500 weekly chart. As you can see, this is your weekly chart over here. What we see is that after the price, formed a top over here, for the last 4 weeks, the price has been very much trending to the downside. Now, of course, what we are going to see over here in terms of this price action is that the most important thing over here to notice, the lows of the last week. That this is very, very important over here, because this week, obviously, we broke above the highs of the last week, which is the high was here, and then this is the high of this week is right over here, as you can see. So we broke above that, the highs of the last week, right? So this indicated to us that yes, the market is ready to move higher, but then ever since the price started to move to the downside, now the focus is really going to be in this particular area, i.e. the lows of the last week. Because if we see a break from here, then really we'll be focusing on the lows of these candles over here to look for an opportunity, or perhaps the low of this particular candle as our next support. So support area number 1 and support area number 2. Now remember, I said to you guys that we would certainly cover some of the macro aspects of that and what is happening within the macro space. So within the macro space, so here is something, and I'm going to try to make as simple as possible for you guys to really understand. Within the macro space, what we're really seeing is that we are at a point where economy has come to a stage which is much, much stronger than it was, let's say, a few months back or a few quarters back during the COVID area. Or in the United States, we're seeing more and more better GDP numbers, employment numbers, manufacturing numbers, retail sales numbers, consumer confidence number, consumer retail numbers. All of this data is telling us that yes, we have a compelling argument for the Federal Reserve to start tightening up the monetary policy. Now, what happens on the back of the tightening of the monetary policy is what you see over here. As you can see right in front of you, when the Federal Reserve kind of tries to start tightening up the monetary policy, the market becomes quite nervous on the back of that. So what we really see is that we see a downward move to the downside. However, at the same time, we do have another issue over in the United States, and that is the debt ceiling. But debt ceiling is nothing to do with the Federal Reserve. Of course, if the US defaults, then the Federal Reserve will have a massive, massive influence. But for the time being, we know that 88 times the Federal Reserve has increased, the US lawmakers have increased their debt ceiling since 1866. So that's nothing new, and it's always a decision the last minute. But market is obviously panicked about that, and then that's what is creating a sell-off in the market. The third thing is about inflation, which is very much on the rise, which is very much increasing. And what investors and trade, what market players are really thinking that, okay, if inflation continue to rise, we're going to have a serious issues on the supply side. So meaning your tech chips and everything in relation to tech would become quite expensive. Excuse me. So that is very much triggering the sell-off in the Nasdaq, as we will see a little bit further. Now, I'm going to pause the fundamentals conversation over here, and we're going to be actually focusing on the price and the price action itself. But does that make sense so far in terms of a very, very high level, what I've explained to you, what is happening in the market? Because on the not this Friday, but the following Friday, the Federal Reserve is going to be looking at the data very, very closely. Of course, Jerome Powell speaks today as well in about 2 hours time, I believe. So his speech today would be very much compared against the data which is going to come out next Friday, and what the Federal Reserve will do from there onwards. So if the number comes in a bit strong, and it indicates that yes, you know what, employment market is very, very strong, we could see some more hawkish messages from the Federal Reserve, which could push the prices higher. Which could really bring two different kind of moves, which we will discuss in a bit. Now, let's go back to the easy part. Now, what do we got to do ahead of this data is we be focusing on the lows of this one, because this is your weekly chart. So the low of this candle, that is something very much in focus for the S&P 500 index between now and until next week. If it breaks the lows, this one, then the next low is going to be here, the low of this one, just below that 4,058. I believe it's going to be about 4,020 sort of a price level. So nearly 300 points below. So this is your level number one. This is your level number two. So these are the two levels. If the price comes into these two levels in these near these areas, that could be an opportunity to trigger. Let's say price comes over here, and this is the area of support which we mentioned over here, which is in line with here. What we could see is a price moving to the upside. However, if it doesn't, and if it falls further from here, then we are very much focusing on the next area of support, which is very much right over here, as we mentioned. So let's say if the price comes into this area and it continues to fall from the previous support zone and comes over here, that could be another great opportunity. While everyone could be selling it, you could be looking to buy that, because the chances are once the price drops over here, we could see substantial upward move. Does that make sense? Now, two things can happen. On Friday, if the data comes in very weak, the market players would say that, okay, now the Federal Reserve is not going to increase its monetary policy, and it's not going to bring its start tapering the monetary policy anytime soon. We could potentially see the markets recovering to the upside. What we could see is the price breaking above the highs of this week, and that would be giving us signals that the price can very much challenge the highs of this candle, of this week's high. So what we could potentially see is a further move to the upside from here that can really take us to a completely new territory. However, if the data indicates that, okay, the things have actually become very strong, the Federal Reserve is going to need to tighten the monetary policy, then as we discussed before, the prices can actually begin to move to the downside, because market doesn't really like the idea of the Federal Reserve tightening up the monetary policy. This is the reason that we are moving to the downside after touching the highs from here, and we are sitting over here. However, if the market believes that, you know what, the data is solid, the Federal Reserve should start tapering up the monetary policy, then, and it shows confidence, then what we could see is, rather than market falling to the downside, market challenging the highs of this week and then moving to the upside, indicating to us that the market is going to go and challenge the high of this candle. Does that make sense? Because that is very, very important. Any questions on that? Because there is nothing, so there's no such thing called, weak question, bad question, or anything. If you have a question, this is your opportunity to ask me that, and then I can help you to to really progress with that. If you don't ask questions, you will not progress, because those uncertainties will continue to dwindle with you. They will continue to cloud your judgment of the market. That is the most important thing. So if you have questions, ask me now, and then I'll be more than happy to answer them. Now, let's move on, because if there are still certain questions, you can always follow up. Does that affect DEX also? That's correct, Henry. It will affect DEX as well, and then we're coming down to that side, and we will explain all of that in a little bit more detail. Now, of course, US 500 index is only one of that it's going to move on Friday, and the other index that we need to keep a very strong eye on is going to be your tech index over here, and that is your Nasdaq index. Remember, we talked about the intense sell-off, and this is your weekly chart. As you can see, for the last 3 weeks, including this week, there's going to be 4 weeks, we have seen very, very intense sell-off. The support, immediate support, is the low of this candle, which is very much in focus. However, if the price continues to break, then the low of this candle could be very much in focus as the next target, or the low of this candle can also be. So we have a number 1, we have number 2, and then we have number 3. 3 different areas of support in terms of the price action, which we are very much we are looking at in terms of the price. So again, if the data continues to, the concept over here is going to be very same as the S&P 500 index. If the data comes in strong, we could see a sell-off. However, if the data comes weak, we could see a recovery. But something that you certainly want to do is keep an eye on the important support and resistance levels, which I have drawn, and let me make them a little bit more clear. So right now over here is your support level number 1, or you can say this is your support zone area number 1, and that all of this between here to here becomes your support area number 1. Your support area number 2, if the price violates that, then we are very much looking at over here. But before that, we do have another level, and that is just right over here. So we will have a level on top of level. So what we have is we have 3 different areas: number 1 support, number 2 support, and of course number 3 support. Remember, these are weekly time frames. The price will take time to get to these areas, because they're not going to be, price won't be coming there just very quickly. Of course, it can come. We could see sharp moves, but the chances are that we're going to see gradual moves. So on the daily time frame is something that we've got to be more focused on. So the daily time frame, this is the immediate area of support where the price could bounce. If it doesn't, then the next area of support is obviously going to be over here. But equally, you could say at the same time that this is a valid area of support too. Market can come into here, and we could potentially see the market bouncing from here. Any questions on that? Yes, you should, Stephen. I mean, looking at the price analysis, that would make sense. I cannot tell you whether you should buy or sell. I can only say that that is a better odd trade, something that can work in your favor. So that's very, very important to know. Now let's look at gold because we got less time remaining now. Now in terms of a gold, again we're going to go in onto our weekly time frame, and we're going to see what is happening over here. For the last 3 weeks, in terms of the gold price, what we really are looking is that the gold price is very much moving to the downside. Give me 1 second. So what we're really doing over here is just we are looking at this area as an important area of support. If the on Friday on the when the US non-farm payroll number will be released, what we really got to be looking at is this as an important area of support. After that, the only area of important area of support in terms of a gold price is really going to be right around over here, 1566 to 1604. I believe that if there are chances that gold price may actually go to 1529. Why? Because this is where the 200 simple moving average is coming, and this can happen over the coming weeks, over the coming months, for sure. But as for the Fridays, considering 2 weeks in a view, what we really kind of wanted to see is if the price continues to move to the downside, this is the area of support, which makes a lot of sense in terms of the price action to move to the upside. I'm sorry, guys, this has been a slightly not there's been some noise at the back, and but next time I'll be back in London, and then we'll be able to do a much focused and a good job there. So I hope to see you guys next week again, and until then, stay safe and speak to you guys soon.